Okay, so we have already discussed the accounting equation, the introduction part, how we develop the accounting equation from assets equal capital liabilities to assets plus expenses, capital income, liabilities. Right. So, as I told you, the accounting equation is a very important chapter because there is a compulsory question every year. Right. So, there are two types of questions. One is in the second paper, you will have a question for about see 30-40 marks, right? 20 marks, right? It's a main one of the main question. Then you will also have an MCQ question, right? You will have an MCQ question. So that MCQ question will be either from the accounting equation or else the profit calculation, profit equation, right? So we did development of profit equation, right? So we discussed this as well. Okay, so I did this example, a basic example from the transaction to recording the transactions in accounting equation. Then we did example 2, a little bit more transactions. Then I was discussing the accounting process, right? From the transactions and events, we record the transactions in prime entry books after collecting the source documents, then posting the transactions in ledger accounts, then preparing trial balance and financial statements. Then we did the basic preparation of prime entry books, the cash receipt journal, cash payment journal, purchases, sales, return outwards and return inwards, prime entry books. So I was explaining just the basic format, right? Then ledger accounts, trial balance, ledger accounts, the general ledger, right? There are two types of ledgers, general ledger and the sub ledger. So here we did only the general ledger. Then from the general ledger, we got the closing balances to the trial balance. And from the trial balance, we prepare the statement of profit and loss and the statement of financial position. Okay, so we did that complete process from transactions to preparation of financial statements. Now today, I'm going to discuss some important past papers. So let's start with 2015 paper, 2015 A-level question number 3, part A. So in this 2015 question number 3, part A. Right. So take your books and get ready to do the questions with me. If you all have doubts, you all can ask in between. Okay, so let me read the question. Narada opened a stationery shop in part of his home on 1st of March 2015 by investing 150,000 in cash. He also brought 60,000 worth of furniture for use in the business on this date. He opened a bank account in the name of the business and carried out all the cash transactions through this account. The following transactions took place during the first month of operations. Okay, so he has started the business on 1st of March. So these transactions are during the first month. Okay, right. So let's draw let's see the requirement. Required. I hope you all can see the screen. Yeah. Okay. Using the accounting equation, show the impact of above transactions from number 1 to 10 with values and state whether each value increase or decrease in front of the value. Use the following format. So they have given a format. So can you all draw this format? Transaction number, assets, PPE, inventory, trade receivables, bank. Then the liabilities, trade payables, loans, and the equity. And requirement number 2 is income statement. Number 3 is composition of equity of the business as following format. All right. So draw the format. Okay. So we have assets, liabilities, and the equity. Assets, liabilities, and the equity. Okay. So before we do the first transaction, transaction number 1, there is an initial investment. There is an initial investment on 1st of March 2015. Narada opened the stationery shop and he has invested 150,000 in cash. He also brought 60,000 worth of furniture. So 150,000 cash and 60,000 worth of furniture is in the business at the beginning. So let's write those two balances. 60,000. And 150,000 bank balance. 150,000 bank balance. And total investment is taken under equity column. total will be taken under equity column. Now let's do the first transaction. Number one, purchased stationery item for 100,000 on cash. Purchasing stationery. So if we purchase stationery, what happens? Our Just tell me, can you all tell me what happens when we purchase stationery? Cash will reduce 100,000. Yeah, that's correct. Cash will reduce. Yes. Inventory will increase. Stationery. Normally, stationery is sometimes we consider it as expense, right? But here, this is a stationery shop. So if a stationery shop purchase stationery, then it will be treated as a inventory. Inventory. So inventory increase by 100,000. Inventory increase by 100,000. Cash or the bank will reduce by 100,000. Inventory increase by 100,000. Bank will reduce by 100,000. That is first transaction. Then the next transaction number 2, sold stationery items with a cost of 70,000 for 100,000 on cash. So we are giving 70,000 worth of stationery. So inventory will reduce by 70,000. Inventory will reduce by 70,000. And we will get cash. Cash means the bank increase by 100,000. So 70 worth of stationery, if you are selling at 100,000, there is a profit of 30,000. If there is a question, let me explain that. Inventory minus 70,000, bank plus 100,000. bank plus 100,000, equity plus 30,000. There is a question. There is a question. So instead of recording in cash account, we are recording it under the bank account. Yes. The reason is, now if you see here, they have mentioned he opened a bank account in the name of the business and carried out all the cash transactions through this account. So he is carrying out all the transactions through the bank account. So no need to maintain a cash column. Everything we can record under the bank column. Okay. So next transaction is purchase stationery item for 150,000 on credit. So this is a credit purchase. So if you are purchasing on credit, our liability will increase. So what is the liability? Trade payables. Trade payables increase. Inventory increase 150. Yes, inventory increase 150. Trade payables increase by 150. Let's move on. Returned 30,000 stationery item to the supplier due to defects. Now, some stationeries are defects, right? So we return. So when we are returning to the supplier, supplier means creditor. When we are returning to the creditor, creditor will reduce, inventory will reduce. Creditor will reduce, inventory will reduce. Creditor means trade payables. Number 5. Purchased a computer on 15th of March 2015 for 120,000 on credit. This amount is payable over period of 18 months. So why they have given period of 18 months? The reason is it's a long-term loan. And this is not inventory. Right? This is not an inventory. This is a PPE, property, plant and equipment. Double entry will be PPE will increase by 120,000. Property, plant and equipment will increase by 120,000, and the loan will increase by 120,000. So we can't consider this as a trade payables because this is not trading item. Okay, so this is a PPE on credit. It's a liability loan. Number 6. Sold stationery item with a cost of 100,000 for 140,000 on credit. So this is a credit sales. Credit sales means we are giving the inventory for debtors or trade receivables will increase by 140, and the profit is 40,000, which goes to the equity column. Inventory will reduce, trade receivable will increase, and equity will increase. So that's the double entry. Number 7. Paid 15,000, the monthly salary of the office assistant. If we pay salary, bank balance will reduce and the equity will reduce since it is an expense. Equity will reduce. Number 8. Obtained 30,000 from the business for personal use of Narada. Personal use means it is drawings. Drawings. So if we withdraw money from the business for his personal use, what happens? The equity will reduce. Equity will reduce. Number 9. Paid the stationery supplier subject to 5% discount on the outstanding balance. Now here, you should be able to calculate the outstanding balance. How do you calculate the outstanding balance? We have purchased 150 and returned 30. So total 120,000. Total 120,000. From this 120,000, we are giving 5% discount. 5% discount. 10% is 12,000. 5% is 6,000. So how much we will pay? 120,000 minus 6,000 means we will pay 114,000. We will pay 114,000. Okay, so the bank balance will reduce by 114. Trade payables will reduce by 120 because we are settling the amount fully. 120. And this 6,000 is a discount received. Discount received is an income. Discount received is an income. So equity will increase. Number 10. Receive the amount due from the debtors, allowing 5% discount. Please explain this again. Okay, there is a doubt. Can you explain the 9th one again? 9th one. Paid the stationery supplier. Stationery supplier means trade payables. Subject to 5% discount on the outstanding balance. Now, this is the trade payables balances. So we initially purchased 150 and we returned 30,000. So how much is the balance? Balance is 120,000. Okay, so for this balance, this is the outstanding balance, 120,000. Right? For this balance, we are getting 5% discount. So 120,000 into 5% is 6,000. 120,000 into 5% is 6,000. So if we get 6,000 discount, how much we will pay? We will pay 114,000. 6,000 is discount received. So that is income. Total amount deducted is 120,000. And the cash payment is 114,000. Is that clear? There is another question. Aren't we considering additional information? Additional information is not required now. The first question they ask is, now always when we are writing the answers, we have to give the answer for what they ask. Now, if you say the requirement, what is the requirement? Using the accounting equation, show the impact of the above transaction from number 1 to 10 with values. So don't try to do the additional information here. Okay. Right. Now, the last one is received the amount due from debtors after allowing a 5% discount. Now, the trade receivable is 140,000. So from the debtors, we must receive 140,000. But we are giving 5% discount. Then how much is the discount? 5%. 10% is 14,000. 5% is half of that, 7,000. That's how you calculate 5%, 10%, 20%. Right? Get the 10% and half. 10% means remove 1 0, and 5% means half of that. Right? 140,000. 5% is 7,000. Then how much will we receive? 140,000 minus 7,000. Then 133,000. 133,000. So we can write trade receivables completely settled minus 140,000. And the bank balance will increase by 130,000. This is a discount allowed, discount given. So it's expense. There is a debtor who need to give us 140,000, but he is giving only 133. So we have given him a discount of 7,000. So we don't get that money. It is an expense. It is an expense. Okay. Right. So that's how we record the transactions in the accounting equation. I hope this is clear. It's very simple. Right. Now we will move to the second part. Number 2. Income statement of the business for the month ending 31st March 2015. Income statement. Right. Yes. I'll give 2 minutes for you all to complete. Give 2 minutes for you all to complete this. Okay. In between, can you all calculate the total? They don't ask it, but let's just calculate the total. You can complete this. Okay, so this is the total. Now, income statement of the business for the month ending 31st March 2015. Income statement. So there are two methods we can use to prepare the income statement. I'll explain both the methods. And there is an easy way of doing it and the complete income statement. So this is income statement. Income minus expenses. So where do you have income minus expenses? It's in the equity column. We have income and expenses in the equity column. Okay. So let's identify what are the income and expenses in this equity column. So the first one is not an income, it is an investment. 30,000, this is sales. This is sales, the profit. Profit from the sales. It's 40,000. What is this 40,000? Which is 100,000 worth of stock sold for 140. That is also profit. 15,000. This 15,000 is transaction number 7. Salary. Salary. This 30,000 is drawings. $6,000 is discount received. This is discount allowed. This is capital. So I just mention what are these items. Now what comes to income statement? To the income statement, we take income and expenses. Okay, so we can take this profit, salary, discount. Only these items will come. Okay, whatever plus means income. We can say profit. Then there is another profit. 40,000. And there is discount received. 6,000. Total income. expenses, salary, discount allowed, right? Okay, so we took all these. Now, other than this, there is something else. What is it? When preparing the income statement, what you have to take? What else you have to take? Tell me. The additional information. That's right. There are some additional information. There are some additional information. So what are these additional information? Number one, the telephone bill of the business for the month of March amounting to 3,000 was received on 2nd of April. So even though you received on the 2nd of April, this telephone bill belongs to March. What is the accounting concept of this? So we have to take that telephone bill as March expense. Which is an expense, 3,000. So can you tell me what is the accounting concept related to this? This is accrual concept, correct? Accrual concept. Even though you receive the bill, on the next month, this telephone bill belongs to the current period or the March. So we have to take it to this month expense. Next, the property, plant and equipment of the business should be depreciated on straight line method at 20% per annum. So there are two assets, two PP. Tell me how much is the depreciation of 60,000? What is 60,000? Furniture. So furniture depreciation. And there is 120,000 worth of, they have purchased 120,000 worth of computer. Computer depreciation. Now this is where most of the students made mistake. In this year, there are many students, they have calculated this depreciation the wrong amount. How much is the depreciation? So I'm getting the depreciation, but the amount is wrong. So this is where you all make mistake. Others, tell me how much furniture depreciation and how much is computer depreciation? All right. So we are preparing this income statement not for a year. If you read the question carefully, they have said income statement of the business for the month ending 31st March. Month ending. So we are not preparing for a year. We are preparing for a month. So always remember to check the period. Is it annual or monthly or quarterly? Right? So that is very important. Now tell what is the furniture depreciation. Furniture introduced 1st of March. So 1st of March means only 1 month depreciation. So 60,000 divided by into 10%, sorry, into 20%, into 20%, divide by 12. So it's 1,000. It's 1,000. It's not 12,000. If you put it as 12,000, it's wrong. Okay. 12,000 is wrong. It's only 1,000. Computer is purchased on 15th. 15th means half a month. 15th means half a month. Now let's calculate the depreciation of computer. 120,000. 120,000 into 20%, divide by 12 and divide by 2, half of that. So it is 1,000. There is a question, there's a doubt to show the working. Working. Now, till furniture. Furniture. 60,000 into 20% into 1/12. Okay, that is furniture. Computer is 120,000 into 20% into 1/12. This is annual monthly depreciation. Out of this, you have to take half, only 15 days. So it will be 1,000. So monthly depreciation is this 2,000. So we need depreciation for 6 months. We need depreciation for 6 months, not for 30 days. Sorry, 15 days. Sorry. We need computer depreciation for 15 days, not for entire month. So we have to take half of that. Half of that is 1,000. Is that clear? Right. Now calculate the net profit. Calculate the net profit. What is the net profit? There's a question. So here, did we get the quarterly value for computer? No, no, we didn't get the quarterly value. We got monthly depreciation. 120,000 is the 120,000 is the cost. So 20% is annual depreciation. If you divide that by 12, monthly depreciation. And if you take half, it is for 15 days. All right. Now let's see. How much is the net profit? It's the month of March. Yes, this is month of March. 15th March only we have purchased the computer. So 15th March to 31st March. There are 15 days, half a month. Half a month. Okay. So the net profit is 49,000. Net profit is 49,000. Okay. Meantime, can you all calculate the net profit using the profit equation? Yesterday we did the profit equation. This one. Can you all calculate the net profit using the profit equation? Right. So let's do the calculation using the equation. Net profit equals closing capital is 234. Opening capital is 210. Is there additional capital? No. Drawings? Yes. Oh, sorry. There's an adjustment here. You have to do. We have three expenses. These three expenses 3, 4, 5. 5,000 should be deducted from this. Minus 229. 229 is the closing capital after these three expenses. Okay. So this is 229. Now we will get it. Why is we deducting 5,000? We are deducting 5,000 because these three expenses were given as additional information. Telephone bill, furniture depreciation, computer depreciation. That is not in the accounting equation. It is not here. That is why we have deducted this. That is why we have deducted 5,000. If you have any doubts, you can ask. Okay. Then you get the net profit as 49,000. 29. So this plus. Remember, our purpose is not doing the answer, understanding the concept. Okay, so you won't get the same question, but if you understand how you calculate these things, how you get the net profit, right, then you can answer for any other type of questions. Okay, that is why I am trying to give different methods to write the answer. Okay, they have not asked for equation. That there is a minus value for the drawings, but when you take here the equation, we have to add the drawings amount. The equity column we deduct, but in the equation, the total drawings amount will be added. The reason for adding is since already it was deducted. That is why we add back. Now there are some other questions. There is another question. Yeah, anyway, the next point is we are doing the income statement. We are doing the income statement. With the sales and cost of sales. Okay. So let's do another income statement. There was another question. So how did you get the 5,000? 5,000 means these three: telephone bill, telephone bill, furniture depreciation, and the computer depreciation. These are not in the accounting equation. It was separately done. See the additional information. This additional information is not here. Only up to 10 we have done here. So that is why I've taken these three expenses: 3,000, 1,000, 1,000. We clear. Now let's prepare the income statement. with sales and cost of sales. With sales and cost of sales. Income statement with sales and cost of sales. Can you all do this? And we'll have about have a 5 minutes break. So in between, you all can do this. All right. So let's do the income statement. So identify the sales. Taking from this. So we have sales 100,000 and there's 140,000. Cash sales and a credit sales. Total sales 240,000. Total sales 240,000. Opening stock, there's nothing. No opening stock. Purchases 100,000 and 150,000. These two 100,000 and 150,000. 250. Then there was a return outward. There is 30,000 return outwards that we have to record. What is the closing stock? Closing is 50,000. Closing is 50,000. Other income is this discount received. There's only one other income. 6,000. Expenses, all these expenses. Salary, discount. So that's it. $49,000. $49,000. So that is the complete income statement. You can use any of these methods for this question. The cost of sales is 170,000. Here, this is the cost of sales. 170,000 is the cost of sales. Is that clear? Now let's do the third part. Composition of equity of the business. Composition of the equity of the business. Using the following format. So they have given a format, so we will follow that format. Opening capital, profit minus drawings, equity. Opening capital, 210. Profit, 49. Drawings, 30,000. Then we can get the closing. Okay. So, the capital equation we are opening the opening capital is not the cost of sales. So the net equity is 229, this amount. After that, 5,000. 229 is the equity. Okay. Any other doubts? Then let's do 2017. Equity part. Equity part is opening capital is 210. This is the opening capital. 210. Profit, we calculated the profit. It's 49,000. And drawings, 30,000. That's it. So you get the closing equity. It's 229. Okay. Let's do 2000. 2016. Let's do this question, 2016. There is a question, the previous past paper question. Do we need to do both methods? No, no, you don't need to do both methods. I was just explaining both the methods. And this is easy. This is you explain the full complete format. So both the methods are fine. So more, I prefer if you all can do this method. But if you are unable to do this method, even you can do this. This is most preferable. Okay, let's do 2016. Draw the format. You can draw the format. So let me go through the question. Someone conducts a retail business. The draft income statement for the year ending 31st March 2016 reported a profit of 600,000. The draft statement of financial position as at 31st March showed a cash balance of 50,000. However, he does not maintain books of accounts properly. It was revealed subsequently that the following transaction had not been recorded in the books of accounts. So these transactions are not recorded in the books. Show the impact of these transactions in the accounting equation and state whether each value increase or decrease in front of the value. Use a format similar to the one given below. Given below means this. Then number 2, revised cash balance, revised profit based on the net effect of transactions on the equity. Okay, first of all, let's record the transactions in the equation. Number one. The sale of goods on credit for 80,000. The cost of these goods were 60,000. Okay, transaction one. Cost is 60,000. So stock will reduce by 60,000. Then 80,000 trade receivables. Because it's on credit, we are getting 80,000 trade receivables. And 20,000 is profit equity. Let's say this is profit. Okay. Next. The return of goods sold on credit for 36,000. The cost of the goods sold was 30,000. So it's a sales return. Sales return means that is the reversal of sales. Right? So inventory will increase by 30,000 because we are getting 30,000 worth of goods, and the trade receivable will reduce by 36,000, and the profit also will reduce by 6,000. This is return inwards. Return inwards. Sales return. Sales return means return inwards. Okay. Third one. Donation of goods costing 10,000. So if we donate, inventory will reduce, and the donation is considered as expense. Inventory minus equity minus. This is donation. Number 4. The maintenance expense of the business was 10,000. Of this, 60,000 was paid personally by someone, and the balance was paid by the business. There is a question why cash is not reducing when donation is made. This is not a cash donation. This is a goods donation of goods. So if it is goods, inventory will reduce. If they say just donation or cash donation, then only the cash will reduce. Otherwise, uh, we have to reduce what they have mentioned. The maintenance expense. Okay. Can you tell me how do we record the maintenance expense? How do you record this maintenance expense? Cash, yes, cash minus that's 6,000. So there is a small mistake. This is not 60,000, this is 6,000. Okay. Oh, now it's right. Maintenance expense is 10,000, paid 6,000. How do you record this? How much is cash? Cash minus 4,000. 6,000 paid by equity owner. Then the equity will increase. If the owner pay, equity will increase. And maintenance expense will reduce the equity. Cash minus okay. Cash minus equity minus and equity plus. This is maintenance. This is capital. Additional capital. Okay, move to number 5. Obtained a bank loan of 300,000 on 1st of July at 12% interest per annum. Interest is not yet paid. How to record this? 30,000 bank loan, 1st of July. 2015. Interest is 12% per annum. So you have to calculate the interest. Interest is not yet paid. Can you all tell me how to record this transaction? Right. So when you obtain a bank loan, we get cash. Cash will increase and the liability will increase. Then interest. Interest, how do you calculate the interest? 300,000. 300,000 into 12%. Into 12% is annual interest. Now this was obtained on 1st of July 2015. So year end is 31st March 16. How many months? July, August, September, October, November, December, Jan, Feb, March, 9 months. So interest should be calculated for 9 months. 12, 0, 27,000. Interest 27,000. So this interest is payable. This interest is payable. We can write the transaction. Cash increase, long-term loan increase by 300,000. And the interest, equity will decrease, other payable will increase. It's a payable value, payable balance. Next, purchase of a three-wheeler for 280,000 on cash on 31st March 2016. There is a question, so can you explain it again? Yeah. Now, there are two transactions in the previous one. One is obtaining the loan. Double entry, the entry for obtaining the loan is cash increase and the long-term loan increase. That is loan amount. Then you calculate the interest, 27,000. Then the interest is payable. If it is payable, other payable will increase. It's payable, other payable will increase. And this is expense, interest expense. That will reduce the equity. So I hope it's clear. Okay. Number 6. Settlement of 30,000 due from a debtor against 50,000 payable to him as a creditor. The balance was paid in cash. This is a set of transaction. settlement of 30,000 due from a debtor against 50,000 payable to him as a creditor. The balance was paid in cash. Sorry, we need to do the sixth one. Purchase of a three-wheeler for 280,000 on cash on 31st March 2016. So why they have given 31st March 2016? Because then you don't need to calculate the depreciation. So that is why they have given end of the year. So you have to record only the purchase of three-wheeler, 280. This PP will increase, cash will decrease. PP will increase, cash will decrease. Number 8, payment of, number 7, settlement of 30,000 due from a debtor against 50,000 payable to him as a creditor. So we have a creditor worth of 50,000, right? So we pay cash 20,000 and 30,000 we deduct from the debtor. Then trade receivable will reduce by 30,000 because it's set off. Trade payable will reduce by total 50,000 and cash will reduce by 20,000. Number 8, payment of 12,000 for life insurance premium of Saman. So what is this? Life insurance premium of Saman means that is borrowings. It's not a business expense. This is considered as borrowings. Cash minus equity minus. Number 9, receipt of the amount due on transaction number 1 after deducting 5% discount. That means this 80,000. We are receiving from this data by giving 5% discount. So what is the discount amount? 5% means 80,000, 10% is 8,000, 5% is 4,000. Right? So 4,000 is a discount given. 4,000 is a discount given minus cash received is only 76,000. Cash is only 76,000 and total trade receivable 80,000. So next. Last one. So last one is receipt of 15,000 written off as bad debts in the previous year. So previous year bad debt we are receiving. Then it's very simple. Cash increase and it is considered as a income. It's considered as an income. And there is a question. Now you all can complete this. For profit calculation, there are two methods. One is using the equation, that means the capital equation. Other one is preparing income statement, right? So which method is better? Normally, they will ask in the question, they will mention the method, whether it's from the profit equation or from the income statement. If they have not mentioned, right, then you can use any convenient method, right, depending on the question. Now, mostly if the equity and if the income expenses are recorded in the equity column, it is easy to use the equation method. Equation method is easy. Okay. Then there is another question. So why it is considered as income, the last one? Because now already we have written off as bad debt. Bad debt is expense, right? But if a bad debt is recovered, if the customer, if the debtor after writing off, if he comes and pay you the bad debt, we can't add back to the debtors and receive the money, right? It's a simple way is it is considered as a additional income, recovery of bad debt. So double entry for recovery of bad debt is cash account debit, income statement credit. Okay. Even if we can read the bad debt account, but it is considered as an additional income. Okay, right. Now the second part. Okay, so the second question, revised cash balance. Now the cash balance which they have calculated is wrong. Cash balance they have calculated is 50,000. That is before the transactions. Okay. Now we're asking the revised cash balance. Can you all do that? Revised cash balance. So for the revised cash balance, I'm going to use cash account. Revised cash account. Opening balance is 50,000. I mentioned opening balance is 50,000. Then these are the transactions. What are the receipts? There are 3 receipts. 300,000, 76 and 50. So what are these? This is bank loan. This is from debtors. And this is bad debt recovery. And the other 4 transactions, these are payments. Maintenance, then purchase of PPE, payment to creditors, and drawings. Okay, so revised cash balance. Can you all tell me the answer for revised cash balance? Balance brought forward is from the question. It is given in the question. Balance brought forward. Yeah, 50,000. There only I took the balance. Closing balance is 125,000. Then the last part, revised profit. Now the profit, reported profit is 600,000. Reported profit is 600,000. After all these adjustments, we need to calculate the revised profit. Then let's draw a statement of adjusted profit. Drafted profit is 600,000. I'll give 2 minutes. Can you find out the adjusted profit? Revised, adjusted, same. Revised profit, adjusted profit. You can use revised or adjusted. That's not an issue. So what comes here? What will affect profit? Is 20 is donation, maintenance, interest, discount, income. Only these transactions will affect. Drawings and additional capital won't. So there are two pluses. It's 20 and 15. Okay. Can you get the adjusted profit? So let's see. There are two pluses. One is the gross profit from sales. Other one is bad debt receipt. Okay, do the rest. There is a doubt. What about the fourth transaction plus 6,000? Won't that come? No, it is not a profit. It doesn't affect the profit. No, it's capital. It's an additional capital. 6,000 is additional capital, so it won't come. And this 12,000 is drawings. So why we make statement of adjusted profit? Because in the question, the third part is revised profit for the year ending 31st March. That is why we are making the statement of adjusted or revised profit. You can say revised profit. Both same. So minus the sales return, donation, maintenance, interest, and discount. Revised means corrected. Now already they have calculated the profit without these transactions. Without these 10 transactions, they have calculated the profit as 600,000. Okay, here in the question it says the draft income statement for the year ending 31st March reported a profit of 600,000. Okay, that is before these transactions. Following transaction had not been recorded. So we are adjusting and calculating the revised profit. Uh, there is a question. So when we prepare adjusted statement of profit, do we only consider the equity? Yes, because uh, what will affect the profit? Only income and expenses. So where do you have income and expenses? Income and expenses are given in the equity column. So that is why we consider only the equity column. Okay, so let's complete. This is the method. Easiest method is this. So 570. I'll do one more question. Okay. Let's do one more question. 2017. All right. So this question, we need to identify the transaction. Describe each transaction indicated from 1 to 10. So let's start. Number 1. So here at the beginning, they have mentioned the owner has not withdrawn any money from the business during the month. Has not withdrawn any money, so no drawings. Transaction number 1, PPE increase and the bank loan increase. So what is the transaction? Purchase of PPE, or you can say using a bank loan, they are purchasing a PPE. Purchasing a PPE of 1 million, in thousands, so 1 million using a bank loan. Okay. Purchasing a PPE of 1 million using a bank loan. I'll give 5 minutes. Can you complete this? Right. There are few questions. Instead of bank loan, can we use on credit? This is not a credit purchase. Okay. Here the liability bank loan has increased. This is not a credit purchase. This is obtaining a bank loan and taking the PPE. So you have to mention bank loan. Then another question. So what is retained earnings? Okay. Retained earnings means the profits. Retained profits. Retained profits. So capital plus profit is equity. So in retained earnings, you have income and expenses. Income, expenses, profit, losses, we recognize under retained earnings. Transaction number 2 is inventory increase, payable increase means credit purchases. Okay, continue. There is another question. What's the difference between retained earnings and capital? What are the items you will both? In capital, we record additional capital and drawings. In the retained earnings, we record income, expenses, profits and losses. That's the difference. Okay. Number 3. Number 3 is capital. Investment of additional capital. Oh, Retained earnings minus means expense. Cash minus. So this is a payment of expense. 400,000. Fine. Inventory reduced, receivable increased, and profit 800. So this is 1 million worth of stock sold for 1.8 million. And since it is trade receivables on credit. Number 6. Receivable decrease, payable decrease. So this is a set of balance. We can say settlement of debtor balance of 500,000 is a creditor balance. Fifth one, it's correct. Yes. So goods on credit worth 1,800. Yeah, that is also correct. You can write like that. Can we say set of? Yeah, you can say set of debtor balance with a creditor balance 500,000. Set off or setting off a debtor with a creditor 500,000. You can say like that. Number 7 is what is number 7? The 7 is depreciation. Depreciation 50,000. 8 150 receivable and 150 retained earnings. What is number 8? What is number 8? Number 8, it is not payment of debtors. Debtor retained earnings means it is expense. 150 expense. What is that expense? Number 8 is bad debt. Yes. 9. Cash reduced, bank loan reduced, and expense. So this is payment of bank loan with interest 50,000. Right? Interest is 30,000. Total payment is 180. So 150 loan repayment. Then the last one. Inventory increase, receivable decrease, and profit also. So it's return of goods. Return of goods. Yes, return inwards. Return inwards. Yes, sales return. Correct. There is a question. Uh, is there any other name for return outwards? Return outwards means purchases return. Return inwards means sales return. Can you explain the eighth one? Eighth one is trade receivable minus and retained earnings minus means it is expense. So trade receivables becomes expense. Trade receivables becomes expense. So it's a bad debt. Number two, profit or loss for the month ending 31st January. Profit or loss. How do we calculate? So normally we calculate using the net profit equation. But here you can simply calculate by taking the difference between retained earnings. Closing retained earnings minus opening retained earnings. This difference is the profit. How much is the profit? Can I tell you? How much is the profit? So it's very simple. Hundred 20. Then the last part, the financial position. I'll just go the financial position. So can't be take additional. No, you can't take additional capital to the profit. No, no. They ask me only the net profit, no. So you can't take additional capital to the profit. Profit is different. So the next thing is statement of financial position. Right. Then I will prepare the statement of financial position using these balances. You will take closing balances. Good. Okay. So it's very simple. You can take the PT in 2950. Inventory, trade receivables, cash in hand, 750,420. Capital and retained earnings in the bank loan, trade payables. So most important thing is the format. Right. So I can complete this. So there are some other questions. I have some videos for those. So I'll share the videos in the Google Classroom. Okay, did you all understand with those questions? So we'll conclude for today. In the next class, we can do a new chapter. The remaining questions, I will share some of the videos. Yeah, and if you all have any specific questions to discuss, send me a message in WhatsApp so we can discuss those questions as well. Okay. So good night. Take care. God bless you.